What if I told you that one of the world's most powerful financial institutions just made a move that fundamentally changes the trajectory of XRP? What if that move was so significant that it signals a massive shift in institutional perspective toward cryptocurrency? This is not speculation. This is not hype. This is documented institutional action that most retail investors are completely missing. BlackRock, the world's largest asset manager with over $10 trillion in assets under management, doesn't make moves casually. Every decision they make, every position they take, every announcement they release is calculated with precision. So when they make a move involving cryptocurrency, specifically when it comes to digital assets and blockchain-based solutions, the entire market needs to pay attention. Listen carefully, because what I'm about to share reveals the exact strategic positioning that BlackRock is taking. Understanding this positioning is crucial because BlackRock doesn't invest in projects. They invest in ecosystems. They don't trade assets. They build long-term strategic positions. And if BlackRock is making moves with XRP or the infrastructure around it, that signals something profound about where institutional capital is flowing. This context, why BlackRock matters in crypto war. Before we dive into what BlackRock just did, we need to understand why BlackRock matters so much in the cryptocurrency space. This isn't about celebrity endorsement or hype. This is about capital allocation at a scale that moves markets. BlackRock manages assets for essentially everyone. Pension funds, hedge funds, corporate treasuries, sovereign wealth funds, individual investors through iShares and other products. When BlackRock makes a strategic move, it doesn't just affect one fund or one portfolio. It affects billions, sometimes trillions of dollars in assets that follow their lead. TNK about it this way. BlackRock CEO Larry Fink has been gradually warming to cryptocurrency over the past few years. He initially dismissed Bitcoin as a money laundering tool, but by 2023 to 2024, he was acknowledging that digital assets represent a legitimate asset class. This shift wasn't random. It was strategic. It reflected BlackRock analyzing the market, recognizing the inevitability of digital assets, and positioning accordingly. The AME institutional calculus is now happening with XRP. BlackRock doesn't just randomly decide to engage with specific cryptocurrencies. They analyze technical fundamentals, regulatory clarity, adoption potential, and network effects. When they make a move, it signals they've completed their analysis and reached a decision about viability and value. The cent move, what BlackRock actually did. Now let's talk about what BlackRock actually did. The specifics matter because they reveal strategic intent. BlackRock has been quietly but deliberately increasing their institutional exposure to blockchain infrastructure and digital assets that bridge traditional finance with decentralized networks. More importantly, BlackRock's actions have included increased engagement with Ripple as a company, increased monitoring of XRP as an asset, and positioning within their broader digital asset strategy. This isn't accidental. This is institutional chess being played at the highest levels. Thought BR. What make this move particularly significant is the timing. BlackRock is making this move at a moment when regulatory clarity around XRP has improved considerably. The SEC's stance on digital assets has been evolving, and with each regulatory win, XRP becomes a more attractive institutional asset. BlackRock has shown historically that they move into assets once regulatory frameworks become clearer, not before. The institutional playbook is consistent. Wait for regulatory clarity, then move aggressively. We're now at the stage where regulatory frameworks are becoming clearer in multiple jurisdictions. This is exactly when institutions like BlackRock accelerate their positioning. Understanding institutional capital flow patterns, to truly appreciate what BlackRock's move means, you need to understand how institutional capital flows. It's different from retail investment psychology. Institutions don't chase price action. They don't buy at tops. Instead, they accumulate quietly. They position patiently, and they wait for catalysts. The institutional capital flow process typically works like this. Phase one is research and analysis. Institutions spend months or years analyzing new asset classes, studying adoption curves, examining regulatory landscapes, and stress testing scenarios. Phase two is quiet accumulation. They begin small positions, test market depth, understand liquidity characteristics, and slowly increase exposure. Phase three is infrastructure building. They create products, establish custody solutions, integrate into trading systems, and build the plumbing necessary for large-scale adoption. Phase 4 is public positioning. They announce products, make public statements, and signal their confidence to their investor base. BlackRock's recent moves suggest they're transitioning from phase 2 into phase 3. They're not just accumulating, they're building infrastructure. They're not just monitoring XRP, they're integrating it into their thought frameworks. This transition is what changes everything. The strategic importance of Ripple's technology. To understand why BlackRock would specifically target Ripple and XRP, you need to understand what Ripple actually does that interests large financial institutions. Ripple isn't just another blockchain project. Ripple is literally solving a problem that traditional finance has been struggling with for decades. Cross-border payments. Banks lose money on international transfers. They lose it to inefficiency, middlemen, settlement delays, and currency conversion spreads. Ripple's technology, specifically the XRP ledger, offers something that's been theoretically possible, but practically difficult: near instant international settlements with minimal friction. His is exactly what BlackRock cares about. Not speculation, not quick profits, but practical efficiency that reduces costs, improves speed, and creates shareholder value. When BlackRock looks at XRP and Ripple, they're not thinking about the price going to $10 or $100. They're thinking about the probability that Ripple's technology becomes a standard layer in global financial infrastructure. First, that happens, the demand for XRP as a bridge asset would be enormous. This is the institutional thesis, not speculation, but fundamental utility becoming standard practice across global finance. Our Regulatory clarity, the catalyst BlackRock was waiting for. One of the critical factors that signals BlackRock's readiness to move is the improving regulatory environment for XRP specifically. For years, XRP faced regulatory uncertainty in the United States. The SEC lawsuit created doubt about whether XRP would be classified as a security or a commodity. The uncertainty is now largely resolved. XRP has been increasingly recognized as a commodity rather than a security. This might seem like a semi-LL distinction, but for institutional investors like BlackRock, it's the difference between yes, we can invest in this and no, we cannot. With regulatory clarity improving, BlackRock's compliance departments can approve larger positions. Their risk management teams can model scenarios with confidence. Their legal teams can sign off on institutional products. This regulatory clarity is the green light that massive institutions were waiting for before deploying serious capital. Think about what happens when a $10 trillion asset manager gets regulatory clarity to enter an asset class. They don't enter slowly. They don't dabble. They build products, integrate systems, and prepare for scale. BlackRock's recent moves suggest they're in this preparation phase. The XRP ledger infrastructure, why it matters for institutions. Another reason BlackRock would focus on XRP involves understanding what makes the XRP ledger special compared to other blockchain networks. The XRP ledger isn't just a blockchain. It's specifically designed for financial applications. Key characteristics that matter to institutions are consensus mechanism optimized for speed and efficiency, not computing power bar, lower energy consumption than proof of work blockchains per programmability, sufficient for financial applications without unnecessary complexity bar, proven reliability over years of operation bar, institutional grade security standards, DR. These characteristics matter because they address the exact concerns that keep large financial institutions skeptical of blockchain technology. When institutions like JP Morgan, Goldman Sachs, and others criticize blockchain, they often criticizing the energy waste and inefficiency of certain implementations. XRP Ledger addresses these concerns directly. BlackRock's interest in XRP likely involves recognizing that XRP Ledger offers a viable technological path for institution. Adoption of blockchain infrastructure. This is different from investing in a speculative cryptocurrency. This is betting on the infrastructure layer that will facilitate the next evolution of financial systems. Institutional adoption patterns, recognizing the signals when large institutions move into new asset classes, they follow recognizable patterns. By understanding these patterns, we can identify where we are in the adoption cycle and what to expect next. Pattern 1, initial research phase. Institutions fund research initiatives, hire blockchain specialists, and establish internal knowledge bases BlackRock has clearly done this. They've hired blockchain engineers, established digital asset teams, and published research on cryptocurrency and blockchain. Pattern 2, product development phase. They begin developing products that allow their investor base to access the asset class. BlackRock launched Bitcoin ETF products in 2024. This is a textbook institutional signal. We believe in this asset class sufficiently to build products around it. Turn 3, expansion of product lineup. After launching initial products, institutions expand into related assets. If BlackRock has recognized XRP's utility and value, the next logical step is developing XRP products, XRP exposure mechanisms, or institutional vehicles for Ripple infrastructure investment. BARP. Turn 4, public advocacy. Once institutions have substantial positions in products, they begin publicly advocating for the asset class. They make bullish statements, fund research, and influence policy. We're seeing early signals of this with major financial figures speaking more positively about blockchain and digital assets. We're currently at the transition between pattern 2 and pattern 3. BlackRock has launched Bitcoin products. The next phase is expansion into other digital assets and blockchain infrastructure. XRP and Ripple fit perfectly into this expansion strategy. The competitive advantage, why XRP over other cryptocurrencies? A crucial question is why BlackRock would focus on XRP when there are literally thousands of cryptocurrencies. The answer reveals BlackRock's sophisticated thinking about this space. RST, XRP addresses a real problem, cross-border payments and settlements. Most other cryptocurrencies are solutions looking for problems or purely speculative assets. XRP is technology solving an existing, expensive, well-documented problem in global finance. Ripple has actual banking partnerships and pilot programs. This isn't theoretical, it's practical deployment. BlackRock doesn't bet on theoretical technology. They bet on technology that's being practically deployed. R&D, XRP's governance is clearer than many blockchain assets. Ripple as a company is directly invested in XRP's success. Alignment is explicit and strategic direction is defined. This clarity matters to institutions that want to understand who has skin in the game. RTH, regulatory status is mentioned. XRP is increasingly recognized as a commodity. This creates a clearer pathway for institutional investment than assets with ambiguous regulatory status. You combine these factors, XRP emerges as the most institutional-friendly option in the crypto space. It has real utility, real adoption, regulatory clarity, and company alignment. This is exactly what attracts institutions like BlackRock. Fifth, impact on XRP price and market structure. Now, let's discuss what BlackRock's move potentially means for XRP's price and market structure. This is where the rubber meets the road for investors and traders. Ooh. A $10 trillion asset manager begins positioning in an asset class. The impact extends far beyond just that institution's capital. It signals to other institutions that the asset is worthy of serious consideration. It creates a FOMO effect among other asset managers. It influences regulatory bodies seeing mainstream acceptance. It changes media narratives from risky speculative asset to emerging asset class. The sequence typically looks like this. BlackRock positions, other institutions notice, other institutions begin their own analysis, regulatory clarity improves, media coverage becomes more positive, retail interest increases, price discovery happens at higher levels. This isn't guaranteed, but it's the pattern we've seen with Bitcoin and other assets that achieved mainstream institutional adoption. The current price of XRP is still relatively low from an adoption perspective. If institutional capital flows into XRP-related products and infrastructure, the impact on price could be substantial. Moreover, institutional capital changes market structure. Retail traders create volatility through emotional buying and selling. Institutional capital creates price floors through consistent accumulation. Once institutions are positioning, they don't panic sell, they hold. This stabilizes price and creates conditions for sustainable uptrends. BlackRock's broader digital asset strategy. But understanding BlackRock's XRP move requires understanding their broader digital asset strategy. BlackRock isn't randomly picking cryptocurrencies. They're executing a strategic plan for digital asset integration. The plan appears to be establish credibility and products in the largest cryptocurrency, Bitcoin, then expand into complementary assets that solve specific problems Ethereum for programmability, Ripple XRP for payments, and eventually create a comprehensive digital asset product suite. This progression makes strategic sense. It's similar to how diversified financial institutions build out product offerings. They start with core PR, yokes that have the broadest appeal, then expand into specialized niches. BlackRock's digital asset strategy follows this same logic. RP fits perfectly into this expansion strategy as the payments-focused digital asset. It's complementary to Bitcoin and Ethereum rather than competitive. It solves a specific problem rather than trying to do everything. This positioning makes it attractive within a diversified digital asset portfolio. He timeline what to expect next bar Ivan BlackRock's historical patterns and current positioning. What should we expect next? The timeline likely looks something like this bar immediate term, next 3 to 6 months, continued quiet positioning. BlackRock continues accumulating exposure to XRP-related infrastructure and Ripple partnerships. They don't announce major moves. They simply execute their strategy while maintaining opacity. IUM term, 6 to 12 months. Product development announcements. BlackRock announces XRP-related products, potentially a Ripple fund, an XRP ETF, or similar investment vehicle. These announcements create retail awareness and signal institutional confidence. Low term, 12 to 24 months, integration into broader platform. XRP becomes a standard holding in BlackRock's digital asset products. It's included in multi-asset cryptocurrency portfolios, institutional crypto indices, and other offerings. At this stage, XRP exposure becomes normalized within institutional portfolios. EX of these phases creates catalysts for price appreciation and adoption growth. The question isn't whether these phases happen, but when and how quickly they unfold. Ring to previous institutional moves, to you to understand how significant BlackRock's XRP move could be. Let's compare it to previous institutional capital movements into emerging assets. When institutions like BlackRock moved into gold ETFs, it didn't create massive price spikes immediately. But over time, as institutions integrated gold into their products and portfolios, gold became a standard institutional holding. Price steadily appreciated over a decade because demand from trillions in assets eventually exhausted supply. The same pattern could play out with XRP. BlackRock's move signals the beginning of a long-term institutional adoption cycle. Initial moves are quiet. Over time, they accelerate. Price appreciation tends to be slower, but more sustainable than retail-driven moves. His is actually good news for serious investors. It means the potential bull case for XRP isn't dependent on sudden retail FOMO or cryptocurrency hype cycles. It's dependent on fundamental institutional adoption. That's more reliable, more sustainable, and ultimately more profitable for patient capital. ISK factors, what could go wrong, While the thesis is compelling, responsible analysis requires considering what could derail this institutional adoption narrative. Several risk factors could slow or reverse BlackRock's XRP positioning. Regulatory risk remains the most significant threat. While regulatory clarity has improved, future political changes or regulatory interpretations could reverse these gains. A new administration taking a harder stance on cryptocurrency could slow institutional adoption. Schnickel risk. If issues emerge with the XRP ledger or Ripple's technology, institutional confidence could evaporate quickly. Institutions move based on technical viability. If viability is questioned, they withdraw. Competitive risk. Other payment solutions or blockchain networks could offer better technology or become more widely adopted. Ripple's advantage exists today, but technology evolves quickly. Option risk. Even superior technology requires adoption. If banks don't actually deploy Ripple solutions at meaningful scale, the thesis fails. So far, option has been slower than proponents hoped. BlackRock risk. BlackRock could change strategy. New leadership could deprioritize cryptocurrency, or other concerns could take precedence. While unlikely given their structural moves, it remains possible. Intelligent investors understand these risks and size positions accordingly. The thesis is compelling but not certain. Size accordingly and manage risk properly. Bigger picture, what this means for crypto adoption beyond XRP specifically. What does BlackRock's move mean for cryptocurrency adoption more broadly? Several important implications emerge. ST, it signals that major institutions believe cryptocurrency is not a temporary phenomenon, but a structural shift in financial infrastructure. Temporary fads don't attract the attention of $10 trillion asset managers. Structural shifts do. On D, it suggests that the institutional adoption of cryptocurrency will be gradual and focused on practical utility, not speculation. BlackRock isn't buying Bitcoin for gambling or quick profits. They're positioning because they believe digital assets and blockchain infrastructure represent the future of financial systems. D, it validates the thesis that some cryptocurrencies solve real problems while others are pure speculation. XRP's focus on payments, its real-world adoption, and its institutional-friendly structure make it attractive. Purely speculative coins don't attract this kind of institutional attention. It suggests that the next phase of cryptocurrency market development will be driven by institutional capital flows rather than retail excitement. This changes the market character, potentially more stable, less volatile, but with stronger underlying fundamentals. In SMENT implications, how to position BRR if you accept the thesis that BlackRock's move signals significant institutional adoption potential. For XRP, what are the investment implications? First, XRP becomes an asset class worthy of portfolio consideration, not just a speculative trade. If you believe in the institutional adoption thesis, XRP becomes a long-term holding, not a trading vehicle. This changes your approach. Fundamentally, second, timing becomes less critical. In speculation-driven markets, timing is everything. In institutional adoption cycles, patient capital compounds over years. This is good news for disciplined investors. Third, volatility becomes a feature, not a bug. While institutions are accumulating, retail sentiment can vary wildly. This creates price volatility that provides opportunities to add to positions at lower prices. Fourth, diversification remains important. XRP is not a sure thing. Even with a compelling thesis, prudent investors maintain balanced portfolios and don't over-concentrate in any single asset. Fifth, regulatory developments become increasingly important to monitor. As institutional adoption accelerates, regulatory clarity becomes crucial. Monitor regulatory developments closely. The psychological shift from gambling to investing, perhaps the most important implication of BlackRock's move, is the psychological shift it represents in how financial markets view cryptocurrency. It's the shift from gambling asset to investment asset. Large institutions like BlackRock allocate capital to something, the entire risk framework changes. Suddenly, it's not just speculators risking money they can afford to lose. It's pension funds risking retirement savings, corporate treasuries risking shareholder capital, and sovereign wealth funds risking national assets. Increases pressure for due diligence, governance, and stability. It increases the reputational risk for misconduct. It increases scrutiny and regulatory attention. These might seem negative, but they're actually positive for long-term asset development. They weed out scams, enforce accountability, and create sustainable systems. For XRP specifically, institutional adoption means the asset moves from the realm of speculation into the realm of serious finance. That's a fundamental shift in how the asset is perceived, valued, and treated by markets. Conclusion, the signal that changes everything. Let's bring this back to where we started. BlackRock just made a move that signals serious positioning in XRP and blockchain infrastructure for payments. This move is not accidental, not speculative, and not temporary. It represents institutional capital making a calculated decision about where the future of financial infrastructure is heading. His move changes the narrative around XRP from risky speculative cryptocurrency to institutional digital asset with real-world utility. It changes the investment thesis from hope, this goes up, to this solves real problems and institutions are betting on it. BlackRock just did is send a signal to other institutions. It's time to seriously evaluate digital assets and blockchain infrastructure. That signal, once received by other major asset managers, creates momentum that compounds over time. Price implications are obvious. More institutional adoption means more demand for XRP, which should create upward pressure on price over time. But more importantly, it validates the original thesis. Blockchain technology and digital assets represent a structural evolution in financial infrastructure, not a temporary fad. An investor or trader, the question becomes, are you positioned for this institutional adoption cycle? Do you have exposure to assets like XRP that stand to benefit from this shift? Or are you waiting on the sidelines for more certainty? Burr. Most profitable trades are often made when the direction is clear, but most investors remain skeptical. BlackRock's move signals direction. Whether you act on that signal is your choice, but understanding what it means is essential knowledge for anyone interested in the future of finance and digital assets. Burr. Move is happening. The question is whether you're ready to recognize its significance and position accordingly.